A lot of people blend closing costs with down payment, but there are two totally different things. By the end of this video, what you thought was just one giant fee for closing costs, we're gonna break down into detail and go over it with you so that by the end of the video, you understand all the closing costs, what goes into it, and it's no longer a mystery. Also, we'll go over multiple strategies about how we can potentially lower some of the costs and make sure you have a firm understanding before you even make an offer, what your closing costs are really going to be or what to expect. So let's look at cash to close. Cash to close is your total amount of funds needed to close a transaction. Now, this is different because you have your down payment, which is your exact down payment amount for your loan, plus your total of all the closing costs combined together, equaling down payment plus closing costs equals total cash to close. So for your down payment, that's your minimum amount required. For VA, 0, FHA, 3.5, conventional could be 5. Each situation is different, but remember, the down payment completely different from closing costs. Sometimes you will have lenders tell you we have certain adjustments that need to be accounted for. These adjustments could be your earnest money deposit. They could be seller's credits. They could be lender's credits. They could be repair credits. They could be prorations. All these things will also come into play, making small adjustments, possibly at your final cash to close number at the end. And these adjustments could either bring up your cash to close a little bit more or a little bit less. So where do all these closing costs go? When you initially start a loan, your lender should give you what's called a loan estimate. And then when we start breaking down the loans, you have your lender fees, which are typically processing, underwriting, and then maybe a couple small other miscellaneous fees for credit reports, a flood cert, maybe a condo cert. Next, majority of your other fees that will come into play will be title and escrow. And then unfortunately, you're also gonna go into state recording fees and county recording fees as well. And then we'll also have impound fees and per diem interest fees. If your loan requires to have property taxes and insurance, we're gonna go off a California schedule of impounds, which each month is different, and your lender should go over this with you. Your impounds can typically end up being one of the most expensive parts of the loan depending on the month you close in, because we could collect 9 months of property taxes, 12 months of insurance. Right there, we're talking about a lot of money. And then finally, your per diem interest. Your per diem interest is the amount of interest it costs per day to own the home. If you're closing on the 20th, you will have from the 20th to the 31st in prepaid interest. Now, after you view the loan estimate and all these fees and you have a mild heart attack and you wonder, how in the heck can I save some money? There are strategies that you can do to bring these down. Number one is a seller concession. You also have lender credits as well. Now with seller concessions and lender credits, each loan that you choose will have a strict guideline about how much money they can actually give you as far as a seller concession is concerned. So with these credits, let's first look at a seller credit for closing costs. Now, like I said before, these will depend on the type of loan you're getting, but in this example, we'll use an FHA loan. So with an FHA loan, you can get up to 6% seller credit. That 6% can go towards going over all of your closing costs, plus rate buy downs, everything. Now, along with the seller credit, you can also get repair credits. Now, the unique thing about repair credits is they can be used for repairs. You can possibly get things fixed before closing escrow or have funds for after escrow, but you need to be very careful about using these funds if you want to use them after escrow, because there is a lot of restrictions. So I would prefer that if these repairs are done prior to closing. Next, we have a lender credit. Now, lender credits typically are not going to be as high as seller's credits, but the way a lender credit works is, as an example, let's look at this. Let's say your normal rate was 6% you were getting, and instead your lender comes back to you and says, I can give you 6.5% and give you $4,000 to $5,000 per closing. If you're tight with money and you need this, this is a good option as well, because who knows, maybe in the future you'll refinance later, save money, and that $5,000 you saved on the lender credit helps you sleep better at night. So once you have your dream house under contract, your lender should give you a loan estimate. Now, a loan estimate is a breakdown of all the fees in the transaction. These are the lender fees, title, escrow, state recording fees, government recording fees, In pounds, the loan estimate should give you a very good idea of what your cash to close will be. But once again, it is an estimate of the cost of the transaction day one. The final numbers on your cash to close will be given to you through a closing disclosure. This is called a CD. Every single lender in every single state, everywhere issues a closing disclosure. Your closing disclosure has all of the final fees listed right on it exactly. Once the closing disclosure is issued to you and you sign it, the lender cannot change it any longer, nor can any of the fees change. They are locked into that closing disclosure. Strategies about how to lower your closing costs. This I'm always asked, and this is what I share with all my clients. So number one, when you look at the section A on the loan estimate, that is the lender's fees. The lender's fees typically should be very simple. It should be like we went over, processing, underwriting, maybe a credit report, maybe a flood cert. But yet some lenders will add a ton of junk fees. If you have a ton of junk fees, you can ask for the lender to remove them, or if they're really needed, because most of the time they're not for your benefit. And most of the time, if you bring that up to the lender will realize they should actually lower the fees because they're just junk. On the estimate, there will say fees you can shop for. These will be like mobile notary fees, title fees, sub-escrow fees, messaging fees, email doc fees, courier fees. In my opinion, none of these people ever change their prices. It's a waste of your time, but you technically can shop for these if you have a lot of free time on your hands. One of the easiest way to lower the closing costs is think about this when you're buying the home. The further you close at the end of the month, the cheaper it is. And then once again, the month you close in does make a big difference on your closing costs for impounds as well. When and how do you pay these closing costs? Now, the closing costs for you buying a home or refinancing, they're pretty much both the same. You don't pay the closing costs till the very end when you're about to close the transaction. Next, a lot of people ask, can I bring in cash to pay the closing costs? No, you cannot bring in cash. We do not accept cash in any of the closing costs. There's only two ways to bring in your final closing cost amount of money. It is an official wire or an official check. And that is what your lender should go over with you, or your title officer, or your escrow officer. All of them should be relaying this to you. Official check or bank wire. This is a pro tip to save you time. When you're wiring in the final amount, whatever the final amount the lender gave you, pad it by $1,500, because that way, if something happens at the end where there's miscellaneous fees for county recording or state or anything with your insurance, you don't have to do another wire or another official check. It's called padding the final funds to close. I always recommend by $1,500. And if that money is not used, it is officially always 101% returned to you within 7 business days, so you never lose your money and everything is documented down to the penny. Here's a final tip for you just to do some mental math so that you have a good estimate of what your final closing costs will be in case you don't have a loan estimate, you're just shopping for homes. It breaks down like this. A lot of people tell you 2% on closing costs is what you should figure. That is not always close to being remotely correct. When you're buying in the state of California, I would figure 2.5% to 2.75% of the purchase price is going to be your estimated closing cost. I know we went over a lot of data here and I tried to make it as simple, as sweet as possible. If you want more information about this, or if you want a mock loan estimate just to look at it, or even a mock CD just to take a look at it, comment below. I'm happy to send you one. Otherwise, always remember, closing costs are going to exist. If your realtor or your lender says, don't worry about closing costs, it's all good, that's probably not the people you should be working with. You should fire them, because the closing costs are going to appear every single time and you want to know ahead of time what they are. Thanks again for watching. Appreciate it. If you want to make comments, make them, especially all you negative Nellies out there that send bad comments, put them below, because I don't care.